So guys, I think a lot of people don't realize that in today's society, it's PvP, player versus player, which means that it's you against me, against the hedge funds, against the government. Except for in this little community that I'm trying to build, what I'm trying to do here is share everything that I know, everything that I'm learning, so that you can make better moves too. And this is gonna lead into why I think it is better to invest in Coinbase over Bitcoin, and why I think that Coinbase is going to be the next trillion-dollar company. So if I would have asked you, would you have invested in Microsoft, Apple, Google, even Facebook 20 years ago if you would have known that they'd end up where they'd end up? You'll answer a course, because people, when it's right in front of them, they don't see the vision. And I see a vision with Coinbase on how it will become the next trillion-dollar company. It's clear as day to me, but it might not be clear to you, which is why I'm going to explain it in this video. So if you're more into ETFs, I would highly suggest Cathie Wood's ETFs, which is the ARK Innovation Fund, ARK-K, the Next Generation Internet ETF, ARK-W, and the FinTech Innovation Fund, which is ARK-F. And if you want to know where you can trade these ETFs, you can actually find them on both Moomoo and Webull. And if you just sign up an account with them with my link below, then you can go and get yourself some free stock. So if you're going to trade these ETFs, make sure to do that, and make sure to use your retirement accounts, because you don't have to pay taxes on those. Now, before we start talking about the institutions applying for Bitcoin ETFs, we actually have to roll back to June 6th. Now, what happened on June 6th? The US SEC sued Coinbase, which is the only publicly traded crypto exchange, and that sent their price tumbling. But that didn't stop Cathie Wood from doubling down. Like, she has balls of steel, because she bought 419,324 more shares of Coinbase at that low cost, which at that time was worth around 21.6 million, and at the price of $78, it would be worth 32.7 million. And 1 week later, on June 15th, 2023, we find out that BlackRock decides to file an application for the Bitcoin ETF. And this is the same BlackRock that has a track record of 575-1 of getting ETFs approved. So on June 30th, the SEC actually found that the first application that BlackRock did was inadequate. So they have to make another one. So they are protecting you in some ways, because what they always say is not your keys, not your crypto, right? So you want to place all your crypto in a hardware wallet, and this is a keystone. If you want to learn more about that, check out the video that I made here. I'm not really using the Ledger much after what happened with Ledger Recover, which is this little device here, but if you want to learn more about it, then check out the video that I made there. But in all cases, in the application that BlackRock made, they said that Coinbase was actually the custodian that they're going to use to hold their Bitcoin. And that's not all. Coinbase will also serve as the provider for providing the price feed for Bitcoin as well. So back when I was a kid, when Pokemon first came out, Pokemon cards were all the rage. One of our friends brought it to the playground one day, and people were crazy about them. But the problem was that back then Vancouver wasn't as big as it is now, and when it's a new product, it's hard getting your hands on that product. So there was really only two competitors that were selling Pokemon cards to kids like you and I. Parents hated it because they were spending crazy money on it. But they kept each other in check. They were each other's competition. Bringing that to what we have now, what'll happen if you only have one supplier? What if the only person that's providing that Bitcoin price feed is Coinbase? That means that they can technically charge whatever price they want in order to provide that data that is needed by BlackRock and all the other companies that are filing ETFs right now. So this all seems super convenient, because the SEC snuffs out Kraken, Binance, Gemini, and they file some charge against Coinbase, which I think that they're probably going to drop. And the person, the custodian that BlackRock is going with, is Coinbase. So literally Coinbase right now is a monopoly. They have no competition. And the thing is, it's not only BlackRock. Invesco, WisdomTree, Bitwise, and even Fidelity, which is the third largest by AUM institutional investor in America, they're also going to use Coinbase as the custodian should they get their BTC ETF approved. So at the end of the day, where does that take us? So I want you guys to remember that Bitcoin did hit $1 trillion market cap back in February of 2021. Now just imagine this. If Bitcoin is approved for an ETF, both BlackRock and Fidelity will be funneling the Bitcoin that they buy
into Coinbase as their custodian. But what they don't know is not your keys, not your crypto, right? Which is why it's so important to learn to use a hardware wallet. And if you don't know what a hardware wallet is, please check out this video that I made right after this one. But when they funnel all that BTC into Coinbase, and it's gonna happen, Coinbase is the go-to guy, what investors will see is that, all right, this is gonna go crazy. So they will all pile money into Coinbase, and Coinbase hitting $1 trillion in market cap is gonna be easy. It's gonna ride that wave up along with the rise of Bitcoin. So guys, if everything stays the same and my conspiracy theory actually turns out to be true, then Coinbase is going to be the go-to guy for all the institutions that are going to be starting ETFs for Bitcoin. They're going to be holding the war chest for Bitcoin. They're going to be the custodian. And that seems just kind of dangerous. But at the same time, what will happen is that Cathie Wood will be laughing her way to the bank, and retail investors can only hope that Coinbase does not turn out to be a custodian like Celsius, Voyager, FTX, which ended up to be scam projects.